This is April Walker, a lead manager with the Tax Practice and Ethics team at the AICPA, and I'm here to answer a couple of the most common questions about the Paycheck Protection Program, or as it's otherwise known, it's PPP, and how it interacts with other SBA loans, as well as other tax relief provisions from the CARES Act. The first question is whether an entity can apply for both PPP and other SBA disaster loans. And the answer is yes. Borrowers may apply for the PPP and other SBA financial assistance. However, the proceeds from each of the loans would need to be for different costs. For example, covering payroll for a different period or other qualifying costs. If a business receives a grant from an EIDL, the amount received will reduce the forgiveness amount calculated for the PPP. Another question is if a business accepts a loan or grant from the PPP, are they eligible for the employer retention credit? And the answer to that is no, they are not eligible for that credit. Finally, if an entity participates in the PPP, how does that affect the deferral of the employer portion of the Social Security tax? The IRS recently addressed this issue in an FAQ. So for employers who have received a PPP loan, they may defer payment of the employer's share of Social Security tax from March 27, 2020 until the date that the lender issues a decision to forgive the loan. Once an employer receives that decision, the employer is no longer eligible to defer payment of its share of the Social Security tax. The payment on that portion from March 27th until the loan forgiveness date is deferred and will be due 50% by December 31st, 2021 and 50% by December 31st, 2022. Check back at www.aicpa.org/SBA as we'll be adding more answers to frequently asked questions. Thank you.